Aloha everyone, Joshua Hayes at BigWaveTrading.com. Another up session overall for the market following Wednesday's session. But, I keep saying it. I do not like what I see at all. This is a terrible, terrible rally. It's another V-shaped rally. It's not quite as extreme as the other ones. But if you just look at the spider here, you can see the average daily volume just continues to fall. And look at the volume today, well below average. If there's anything, we have positive BOP, you know, with the price action, so it's at least confirming it. The most that I can probably hope for at this point is as we head into August and September, two seasonally very bearish months for stock returns, that we consolidate sideways, maybe pull back to the 5200-day moving average. But I tell you what, it's going to be hard for stocks to continue to move higher with charts that look like this. I mean, what this tells me, a stock chart like this or for an index, is like this market is not under accumulation. If anything, it's probably more than likely under systematic distribution, as we have seen. Look at all the, just going back out to even back here, 2015. Look at all these big, tall red bars and find the big, tall green bars. So it appears that we actually have systematic distribution in the market during this uptrend. But what it all appears to me is that we just have a hidden floor via share buybacks, which reduce the price earnings ratio, which makes stocks quote, quote, cheap. And the dividends, the increased dividends, making stocks attractive with the share buybacks, gives a floor in the market for institutional funds that must hold tons of shares to sell into, because this is not a good setup, and it doesn't matter where you look. So the bottom, look at this is silly. It's just silly looking. It's another V-shaped move. The wedging of the uptrend, it's just not good, folks. It's not good. I don't care. You can spin it however you want. I will go with the trend for however long it lasts. I'm already fully invested. Basically, I'm 95% long. I only have 5% capital to work with. I've already entered my good to cancel buy limit orders after giving the stocks to everyone in the chat room, and I'm maxed out again. So I'm back to being maxed out capital wise with the 3 new long positions, ad signal, and the 2 speculative longs. So, I'm not going to fight the trend, but at the same time, I in no way, shape, or form embrace this trend. As you can see with the QQQ even, look at all the big, tall red bars. Where's our big, tall green volume bars? They're just nowhere to be found. IWM, same thing. Look at the New York Stock Exchange today, another rally, below average volume. If there's anything good news from today's session, it's that the Dow Jones Transportation Average had a good session, but overall, it's not hitting new highs with the Russell 2000 and NASDAQ, is it? It's actually still lagging, and it's lagging quite a bit. So overall, I do not like what I see. My individual stock charts look terrible in stocks. My CanSlim scan, I have never seen so many stocks hitting new highs on either no volume or just loaded with yellow and red. Green is a precious rare gem that I just cannot find out there in my charts. And not only that, I mean, just look, you see, last time I saw green in the DJ20 was all the way back in January. Well, this is what the majority of my charts look like. And not only that, there's just no accumulation out there. So keep all of that in mind as we go through everything and all the new long positions. Just want to go ahead and jump into the sell stops. You can see all my limit orders filled. ALTR was almost a mistake on my end. I happened to put in the whatever I put in. The open 34.33 was what my limit was, and then I looked and I was like, why hasn't ALTR filled? And then I was like, oh my god, I am an idiot. 34.61 is what I should have been filled at had everything worked out to plan, but because I make mistakes because I am a human being, 34.86 is my fill. But besides that, as you can see through here, many stops triggered today. The vast majority for profits, sell stop, profits, 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 sell stop, profits, profits, sell stop, profits, sell stop, profit stop, profit stop, profit stop, profit stop, sell stop. So as you can see, the vast majority were for profits. And with that also being said, there weren't a whole lot of full sell signals. Fate is a 100% sell signal. I was knocked completely out. I believe half here, all here. It is now 100% sell signal with it closing below the 50-day moving average. The signal date's low a day on heavier volume after already losing that green BOP catalyst. And then NCS, that's a full sell signal. It still didn't clip one of my stops. I think it's the stops that are down here. I'm consolidating them all to 5 cent because it's a 5 cent trading stock to 5 cents below today's low day at 18. But due to the velocity, the crack, and the near low day close, this is not a 50% sell signal. Anytime anything ever looks like that, it will forever and always be a 100% sell signal. And then 50% sell signals, MIXT, that's a 50%er. Half of what I have goes to today's low day. But I think I actually might be splitting hairs. Oh, it is. It's right on it. So I already have half of my remaining position there. I'll just make sure that that's the way it is for now on mixed T. Sky, that's a 50% end of day sell signal. This stock went from being something that at one point intraday on the 13th, I was looking for a beautiful setup long position on. Beautiful. This has been one of my very few rare charts that look good out there. A few days later, nope. So Sky's a 50% sell signal. Half of what I have gets moved to today's low day. PLT is a 50% end of day sell signal. I no longer have a position. If you do, 50% needs to be moved to today's low day. Surf, it's a 50% sell signal. I have a stop here at right below 1403. I will be now moving half of what I have remaining to 1 cent below that low of day right there on Surf. And JYNT 50% sell signal. I'll be moving half of whatever I have left to 1 cent below the low of day here today. And ACER is a 50% sell signal. I'll be moving half of what I have left to 1 cent below 1977. And unless the market gaps up tomorrow morning, that guarantees that that stop will be triggered. Now, surprisingly enough, despite my red and yellow no accumulation filled charts at new highs and with the market looking silly, I still do continue to get new long signals. Every day I get new long signals, I'm ready for them all to fail. I do not embrace this tape. I will explain to you guys one more time. I know when to put 20% of my capital into one stock. I know when to put 10% of my account capital into a stock. I know when to put 5% of my account capital in a stock. I also know when new traders shouldn't be trading. And this is probably one of those times, but at the same time, if the market keeps on hitting new highs, everybody's going to yell at me and be like, oh, well, you told me not to trade. Listen, everyone is different. I don't know your personal risk tolerance. I don't know your personal greed level. I have a greed level of approximately 0. I'm not into it. I'm into trading correctly. I make money trading. I'm not trying to get 100% gains every day. You want to do that, you got to day trade. And guess what? That's very hard to do. It's not hard for everybody, but it's hard for most people. It's a little difficult for me. It's an area that I plan on investing more capital in later on because that's where the big returns are nowadays. The end of day stuff just doesn't have the juice like it used to. But for now, I'm quite comfortable doing what I'm doing. So, with all that being said, this is not a time to buy 5 stocks, 20% of capital in each. It's a time when I find a new long position, I'm keeping it small. And I'm going to keep doing that along with keeping tight stops until the signals stop materializing, the market completely rolls over, or the market gets better, the signals get better, and then I can increase size. For now, the status quo that's been in effect since January continues. And on that note, I have 3 new long positions, and one is a play on the overall small cap value side of the Russell 2000, S&P 600 actually. So IJS is a small cap 600 bear value index fund ETF. It made its way into 3. Oh my gosh, I actually wrote this wrong. One and a half. Nope, I got it right. This made its way into 3 separate scans. My daily volume surge scan, which looks at stocks that are up on the most volume compared to recent volume totals of the past year. Made my ETF scan, and it made my price volume BOP surge scan. So IGS is a 2% signal. I'm getting long. Limit order 167.71 is a way to play the small cap since it triggered. First cut loss 165.01. Final cut loss 162.02. And that's it. It's that clear and simple. Not 20% of my account capital, not 100%, not no trade, just 2%. And if it doesn't work, cut my losses. I'm only going to pay $1 in commissions, as you see every day when you watch this video lesson. The next new long signal is NSIT. A few stocks flagged in the Can Slim scan. This was the only stock that had over 90 composite, 90 EPS, and 90 relative strength. With it being 90s across the board and having green light means go on everything in Investors Business Daily, NSIT is a new long. Now I also flagged BCEI, which is Can Slim quality, and KAMN. KAMN did more work in the lower end of the range than the upper end of the range. BOP has fallen too far from the recent levels, and BCEI kind of down a little bit too much. BOP has fallen off the recent levels, but the moving averages are under what I call a car crash. They're all just crisscrossing each other, and there's some red in this chart, so that's a no-go. And SIT is the only CAN-SLIM quality stock that has had a powerful previous move. It's got a pocket pivot point signal right as 50 and 20-day moving average, has the BOP confirmation going in the right way with the slight volume surge, and is 90s across the board under the Investors Business Daily rating. So in SIT, 1% of my account capital, limit order 49.62. My first cut loss level 48.02, and my final cut loss level for now, I believe, is 45.39. There it is, right there. So half right here and the final half here, and remember, if the first half goes, that second half will never see the light of day. And then KPTI, this is the only one from my perfect speculator scan that seemed worthy going. Why? It's bouncing off the 50, 20-day moving average with a pocket pivot point signal, that heavier volume. There's BOP confirmation. It's going overall in the right way. The hammer candle pattern right at the 50-day moving average. So, want to get long, 1% of my account capital, limit order 1876. First cut loss right there, 1774. Final cut loss, 1654. Once again, this level goes. Before this level comes into play, I'll be moving at least half to all of my stops up to the next low, as long as this one doesn't come into play. And then there's one ad signal, SUPV. This is probably one of the better looking charts out there, and that's not saying much considering the downtrend it's under. But on the short term, I have very few charts that have this much green BOP that have consolidated on lower volume while keeping that max green BOP and then moving higher with a heavier above average volume move while keeping the max green BOP. So with SUPV, it was in both my green BOP for 20-day scan and my max green BOP for 5-day scan. And even though relative strength wise it's no longer CAN-SLIM, earnings per share wise and sales wise, it's definitely still CAN-SLIM. It's still got some very nice EPS and sales growth. So with SUPV, 1% of my account capital is an add. Normally it would be 2%. Limit order 1177. First cut loss level 1090. Final cut loss level 998. Now, if you don't pay $1 commissions, if you do your due diligence and don't like any of the new long positions, you don't have to take any of them. That's up to you. I can handle the workload, so I'll take the trades, and if they don't work, I'll get out of it with small losses, raise the capital and wait for a better signal, and if no signal triggers, then I'll stay in cash. And if they work, great. That's what I expect them to do. Rinse and repeat. It's just that simple, folks. You don't have to trade here. I don't like the market. If I was running your money, I wouldn't take any of these trades, not with the current tape the way it is. We pull back, we get bearishness up, we get some better looking charts, then maybe I start operating with a little bit more confidence, cockiness, gusto, conviction, whatever you want to call it. But right now, no way. I do not like what I see. And just to even bring that point even home even further, let's pull up this chart to end it on this note. The put-call ratio has fallen back to 0.76, the IBD total put-call ratio. So the crowd is already, again, complacent. But more importantly, see the S&P 500 wedging here to new highs? The New York Stock Exchange advanced decline line isn't, right? So intermediate term, it's fine. But on the most shortest of short term, that, my friends, is negative divergence. And I don't ever like seeing negative divergence regarding breadth. So just keep all that in mind.